Good evening, guys. This is Eric with Inspired Trading. I'm looking at USO, which is basically US oil, or crude oil. I'm on a monthly time frame, and I want to show you the power of the Fibonacci's. We'll use the Fibonacci retracement, which is a correction, and the Fibonacci extension, which is a tool that you use to figure out the target. Now, I'm not really versed in understanding the mathematical equation. It is a mathematical equation. For those who are math geeks, there's a ton of books, a ton of resources on the Fibonacci. I'm not that type of learner. I just want to use the tool. I'll give you an example. It's a lot of components to a vehicle that I don't know about. If I open up an engine, I can tell you the basics. I can change a battery, I can change oil, and I could change a few things. But if you gave me a quiz on an entire vehicle, I wouldn't be able to do anything with that. I fail it, but I know how to drive, and it get me point A to point B. So look at the Fibs; it's the same thing. All right, so I'm gonna go over to my measurement. I'm gonna go to my tools over here to the left. You see Fib retracement. All right, that's what we're gonna be using right here. And then you see it said trend base. We're gonna be using that. But before we do that, I want to show you guys something. Before we can do anything with the Fibs, we must identify a strong trend, or what we call an impulse. You see back here in 2008, right in this area, 2008, you see a big, huge drop off. All right, look at this huge drop off right here. See this? All the way down here. That is called an impulsive bearish move. All right, when something impulsively moves to this direction, it lets us know that eventually price wants to go even lower at a future date. But for right now, this is what we have. Okay. Then we have something called a correction or a retracement, which is this move. All of this is a correction of this move. Okay. When we use the Fibs extension tool, we measure the impulse. When we use the Fib retracement tool, we measure the retracement. All right. But first things first, when we identify that an impulse has been made, and then once we get confirmation of 3 or 4 candles that is formed, and also we're on the monthly candle chart, so every candle in here represents 1 month. So once we get 4 candles reversing and going to the opposite direction, we now have what? A new trend. We have a reversal. Therefore, we can now get ready to count on price heading back up to what we want to call the golden ratio, which is the 61%, and in between the 78%. We want price to come back into that range, and that lets us know that we got an opportunity, because like you said, this is oil. You can short oil. You can put contracts. You can make money on oil going down. So the smart people that knew how to trade this, they knew to get in and trade it up to these zones, and they knew to get out once they get there. All right. So this is what I want to do. I'm going to erase all this by doing a bar replay, and I'm going to show you the magic of how the Fibs work. Okay. So we'll start here, and we'll come all the way back to here. Now you're probably saying, well, Eric, you're looking back at hindsight, so it's probably easier for you to make these predictions. No, not necessarily, no. Remember, it's rules. When an impulse is made, we then wait for what? 4 candles to come back up. And then we do what? We measure this move. All right. So we got 1 candle, and then we have 2, 3, 4. But you already seen all the candles forming, so you already knew where it was going to go. So what we're going to do is going to use the extension tools. I mean the retracement tool. Okay. Start from the top. Click once. Come all the way to the bottom, or where price was rejected. Click once again. All right. So you see right here it says 61%, and you see right here it says 78%. For the purposes of the video, to keep it simple, we're not going to focus on the other areas right now. We did that in another video. What we're expecting is price to work its way back up into what? It's between the 61 and the 78% range. So what do? We put a what? Green box. Put a green box all in this area. All right. What is the green box for? It's to let us know that it's a target area for price to enter. Okay. We got price that comes all the way up in this area. That's what we want. Okay. So let's imagine we're back in time. This is like February 2009. All right. We're back in time. Okay. So once we get that 4th candle going, we know, all right, we got a high probability, or we're going to wait patient for price to come back here, or you can trade this up. Okay. If you think oil is strong, you can go ahead and you can trade it to this zone. All right. Once we got that, we take this off. And then now we're going to measure this. So we'll go back over here to the tools, trend-based extension tool. You click on it. All right. Start from the top. And then click it and go back. There we go. All right. Let's come out to the side a little bit. Click. See the little green line? Drag it straight down. Or you can go to the side a little bit. All right. Click again. Drag it back up to the same level. Click it. Boom. All right. See this right here? It says the extension is what? 1.272. That is the main extension. That's the target we want to set our targets to. All right. So this is around $1.21, 65 cents, somewhere in there. Okay. Now, you probably like, Eric, you're a fool to think that oil is going to go down to like 60-something cents. But all the big boys, all the boys in the institutions, they're using these tools. They know that. They're looking at higher time frames. Everything is mapped out. So this is what happened in 2008. Now, I can't tell you that it was going to happen 10 years later. No. I mean, I don't know if the big boys know that it was going to come 10 years later. But what they do know is that this target is very likely to happen. They just don't know when. But you trade on what what you see and what you know. All right. So we want when price comes up here. All right. So I'm gonna go ahead and write this down right here. So you measure that impulsive bearish move, and then we're gonna look to short oil for years when it reaches this box. All right. Also, what we're gonna do is we're gonna add another box down here as targets. Okay. And then we're right in the box. Targets well. Okay. Targets. Okay. So that's done. Now we can click and we can delete this now. All right, we set. Okay. We're looking back in time. Now we're on the monthly, so this is a long time. It's like it takes years for this, but you gotta see the bigger picture. And what I want you guys to see is, you knew what happened in March. You knew the market dropped off bad. All right. And what you're gonna see now, you're gonna see that we may climb back up. It may take a couple years for us to climb back up and look like we're doing great. And I'm gonna tell you what you better watch out for. You better watch out if President Trump gets elected again. It may be good for the country for the next 4 years. And what I'm thinking is, these charts are going to look like we're going to have this massive move down, and then we're going to have a lot of years of growth. We're going to have 3 or 4 more years of growth. And then as soon as he get out, we're about to see something nasty to the downside. That's a possibility. So keep that in mind as I play this. All right. So we playing. All right. See, you see your fourth. See, we already got our 4 bars. We up. All right. And if anybody understand the whole indicator, this green line that I have right here, you already know what time it is. So it's a great indicator we use. I go over another video with that. All right. So price moving on up, and you got some dips here and there. All right. And once we get up to this green box up here, I'm gonna speed it up because we'll be here all day waiting on this. Now imagine none of this has already happened, but remember, based on the Fibs, we already set our zones. This is all rules based. That's it. Well, it's in the box. Okay, we're shorting now. All right. If we were in forex, you would probably have to have an advanced account to hold for this many years. I wouldn't hold this many years, but let's say you did. I would have to. That's 11,500 pips. If you did a $10 standard, it's over 110,000 something dollars. You may. All right, so we already up here. So let me speed it on up. I'm just gonna go ahead and complete it. All right, we're gonna go ahead and go to real time. Boom. Hold on. Bam. All right, let me click out of it. All right, see, targets was hit. Now you say, well, Eric, why you got a big green? Because targets could go lower. So, but I just want to touch the tip of that green zone. That's all. But look what targets came. All right. Boom. Hit. You just saw us go back in time to what? See it right here? 2009. Where are we now? 2020. Big boys already knew this stuff. My goal is to try to get you guys ready to start trading as if we're the big boys, as we institutions. We got to get out of this small money. We got to get out of this. It's time to elevate. We got to get higher. We got to start looking at the bigger picture. You know, yes, I trade Forex. To me, that's a little money. You know, you say, well, Eric, if you make $3,000 a day, is that little money? Yes, it is. And the reason why I'm saying is because we have so many opportunities we're missing on so many other advanced investment vehicles that we can get into, that if we're looking at decades, if we're looking at generational wealth, it'll surpass that little $3,000 you have made in a day. And like I said little, but I'm trying to get your mind to think bigger. Okay? Bigger. So many other things are out there that could be built, but we're spinning our wheels chasing some of these small moves and small things, okay? So I want you to think bigger. Stop having set yourself in the box. Investor thinks big, okay? Traders somewhat want to think small for the most part. And traders have a complex of complacency. That's why you rarely see $1 million traders. There's a difference. They make hundreds of thousands a year, and you may be satisfied with that. But if you want to build generational wealth, that ain't it, Chief. You think about Warren Buffett. He thought years out in advance, all right, and he made moves based on that. So that's what you need to understand too. That's why I harp on look at the emerging markets of cryptocurrency. Look at those things, all right. Ain't no one on this list would. If a matter of fact, it's some of you listening, there's some people in the group that actually had Bitcoin when it was at like I think 60 cents, 70 cents. Like had they been thinking properly, and who would have known? Hindsight 2020. They would have never known. But now that we do know that we need to prepare for the future, but they had it at cents. A simple $1,000, they'd be millionaires. Okay? So, yes, traders can make good money, they can make good living. That's all good and dandy. I'm trying to be more than that. I've made a lot of great money in my life, but I want to set up a legacy. In honor of my mother and father, that's what I'm going to do. Leave a legacy for that. So, but like I said, in this video went over the Fibonacci's retracement and extension on U.S. oil, and you see that the tool can be used. Now, is it perfect? No. That's why you have rules in trading. If X, Y, Z do this, then I will do that. If X, Y, Z doesn't do this, then I won't do that. See this first green box up here? We would have never went short if it what? Didn't come in this area. Only when it comes in this area, we look for what? Shorting opportunities. If it didn't come, we don't touch it. Remember I said over here, look for 4 candles. That's just my rule. Yeah, 1, 2, 3, 4. 4 right here. And the 4 lines up with what? Anybody know the whole the moving average or the whole? This green line, when price goes above this green line, that's an indicator that wants to go up. See this dip? It's cut, called a cut. All right. We would have ended right here. Why? We got 1, 2, 3, 4. 4 candles. That's a rule. That's my rule. All right. When you start trading, you make up your own rules. You find patterns. It's cool. I'm not discouraged, you guys. I know I said I'm not worried about that trading stuff. Trading is great. It's good. I think you should marry the two. Learn investing and trading. They 2 different things. And that's why I coined the term, and it may be already out there, but I call it a technical investor. I'm pretty sure it's already out there, but a technical investor. You got a technical trader, you got a technical investor, and then you have a fundamental investor. I never heard of a fundamental trader, but you may have one of those. Fundamentals look at PE ratios and company earnings and all that other stuff, debt, who's running the show, blah, blah, blah. That's not how I trade. I care less about the fundamentals. I may glance at them, and it may be like the icing on the cake, but I look at a chart, and the chart lets me know what I need to trade or what I need to invest in. So as you take this journey, you're going to have multiple ways of doing things. You're going to see things that other people don't. You're going to learn new things that other people haven't, and you'll be able to teach people new things. All right? It's an evolution. So I hope this video helped. Please ask any questions. I'm sure to see if I can answer them. Have a great one.